Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money. Our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today, our trivia theme is miscellaneous trivia. And we have a special guest who we've had on before, tax attorney Steve Moskowitz. Steve, welcome to The Best of Investing.
Thanks so much.
Yeah, let's see. And we like to have you on usually toward the end of the year so that we can help the audience with a little bit of tax advice.
Tax advice and hopefully a bunch of tax savings.
Yeah, that's
Absolutely.
that's the most important thing. So where would you like
Chris Tucker should have listened to you.
Yeah, that's right. Yes. You're so where do you want to start? You got a lot of good stuff you want to share with us.
I'd like to start with pensions because that is such an incredible benefit to clients.
All right, go ahead.
Go for it.
Yeah. We're all ears.
So one of the things there's over 20 different types of pensions, and I use the term pension retirement accounts interchangeably. And the bottom line is I ask clients, do you want to pay more or less taxes? They always answer less. And I say, this is terrific. There's 4 benefits to pensions. 1, you save taxes. 2, the earnings are not taxed while they're in the plan, so they grow a lot faster and bigger. 3, cash flow. Almost everything in tax requires you to write the check by December 31st, year 1, in order to deduct it in year 1. Not with most pensions. With most pensions, you can write the check up to the time of filing the return plus extensions, which for most people is about September 15th, year 2. So the bottom line is you have that. And the 4th benefit is asset protection. It's safe. There's special federal laws. If you get sued, and when you're in business, you can get sued, or you can have an automobile accident. Ask Hulk Hogan when his son drove the car, or anything else. And the plaintiff cannot touch your pension. Although I hate to mention his name, ask O.J. Simpson, who's for a long time had a big judgment against him. He's not lost 1 penny of his pension. And if everything goes badly for you and you have to do a bankruptcy, even the bankruptcy court can't touch your pension. It's safe. So the bottom line is pensions are tremendous. Now, there's all types of pensions, and I like the fancy ones where you can make very large contributions. Another way to think of it, if you're in the top tax bracket, for every 200 grand you put in the pension, you save 100,000 in taxes. So sometimes the client says, well, I don't know. I don't want to put in that 200. I say, okay, then write a check for 100 to the IRS in the state. No. I don't want to do that. You mean 100 of that goes to my pension instead of the tax? I say, yeah, I'll do the pension.
Yeah, it's interesting too, because I hear people on the radio talking about, well, no, don't do these pensions because you're going to be in a higher tax bracket later on and you're going to have to pay more taxes. And the way I look at it is, if you can save money now, it's always good. Because
I know we're on the radio, but can I use some strong language?
You have to be careful. We are FCC regulated.
Both feathers.
Both feathers. I totally agree with that. I know because
here's what I say to them.
Yeah.
Suppose the tax rate was 90% when you retired.
Okay.
If you have a fund of money that you wouldn't have had, and you gave away 90% of it, you're still better off, because if you pay the taxes, that's it. The money is gone.
Yeah.
So even if the tax rates are higher when you get out, so what?
And you get the compounding of tax deferral.
Exactly.
All that time. Yeah.
You don't pay the taxes. You have the cash flow benefits, time value of money, the compounding, the earnings, and you have here's your choice. You can have a huge sum of money that you pay some taxes on, so what?
Yeah.
Or you can have a bunch of canceled checks payable to the IRS. Which of those sounds better?
And especially if you have those specialized types, like 401ks where you have any kind of matching from an employer, that's just free money.
Yeah.
True. And then if you're doing the 401ks, you might want to say, well, how about a 401k with a profit sharing and maybe almost triple what you can put in? There's all kinds of stuff. So besides the profit sharing, I'm very fond of cash balance plans, which is a form of a defined benefit. And you can have multiple plans.
And
So
my favorite's the HSA. I love that one. Because that house
you
savings.
throw that into.
Yeah, because
But I mean, with tax savings, it's not one. It's like a menu where
Yeah.
you can choose as many desserts as you want. You're not limited to one dessert. You say, well, you know what? I want chocolate cake and ice cream, and I want some cookies, and I want a pumpkin pie too. Okay, you can have it.
You're getting me hungry there, my friend.
And we're hungry for tax deductions and tax savings.
You
Good
walk
segue.
right into that one.
Yeah.
There's all those years
That's
on
fantastic.
TV and radio, guys.
That's it. Now, and when we come back, we definitely want to talk about some tax strategies and some changes that are going on, not only with pensions, but other types of tax issues. So we are going to cut to our first commercial break. Here's our first trivia question. And it is, let's see here. What athlete played co-pilot Roger Murdoch in the 1980 movie Airplane? Okay, so he was a co-pilot. His name in the movie was Roger Murdoch, and he was a professional athlete. We want you to give us the name of that athlete. And call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Want to make a quick mention here for get into the Christmas spirit with your favorite holiday tune set to new, exciting choreography. Celebrate the holidays with the Christmas Ballet, an annual show by the Smuin Contemporary Ballet that tours the San Francisco Bay Area. Check them out at smuinballet.org. That's SMUIN ballet.org. All right, stay with us. You are listening to The Best of Investing with Edward Brown, Nam Phan, and our special guest, tax attorney Steve Moskowitz. Stay with us. We'll be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan, our co-host, who hasn't been on for quite a while. Welcome back, Nam.
Yeah, I've been gone from the show for a while.
I can't say you're on vacation because you
Don't let these walls fool you.
Yeah,
Kitchen.
kitchen walls. That's right. And our special guest, Steve Moskowitz, tax attorney. Okay, guys, here's our first trivia question. What athlete played co-pilot Roger Murdoch in the 1980 movie Airplane?
Our guest allowed?
Yeah. Okay, now you can say.
Kareem Abdul-Jabbar.
Correct. Now, I'm going to give you another trivia question that's not part of this. What was his given name?
Steve,
Don't
you know
remember that
that?
one.
What was he called before? What was his name before Kareem Abdul?
Oh, that was Lou Alcindor.
But actually, his given first name is not Lou.
Lewis?
No, it is Ferdinand.
Ferdinand. Wow.
Yeah, nice trivia question there, huh?
That is good.
I asked that on the sports show, and nobody got that one either. Okay. All right, Steve Moskowitz, tax attorney. Okay, so we knocked out pensions so far. But are there any rule changes that are going on?
Yes. Now, what happens is I'm going to say something that's California specific, and then I'm going to move to the other states and then the feds. So in the Tax Cuts and Jobs Act, we lost the ability to deduct state taxes on our federal return in excess of $10,000.
Oh, yep.
So California and almost half the states have a workaround. So what the workaround is this, in California, it's AB 150. What happens is you set up an entity, a flow-through entity like an S-Corp. Then you make an election to pay the taxes at the corporate level instead of the individual level, and then you can deduct them. So essentially, you get to deduct all of your state taxes on your federal return, because if you have an S-Corp, you're flowing through to the personal return.
Yeah.
That's nice. And we're real hot on that. However, the Congress is talking about raising the 10 grand to 80 grand, which there's an awful lot of people in between that area who are paying more than 10 grand in taxes, but less than 80. Again, who knows what the Congress people are going to do. And there are certainly people that are paying more than 80 grand too.
Well,
then there's asset protection for entities. So there may be other reasons to set them up.
Well, here's the funny thing that I think about. It's like all of this quote social justice, trying to help the little guy, blah blah blah. Really, what they're doing is they're helping the coast, the people in the blue states, So here all this social justice of, yeah, you can't deduct all these high taxes and evil rich people. But of course, we don't want to have the rich people lose their tax deduction, Oh, when does Congress ever talk out of just one side of its mouth, huh? All right.
Indeed.
Next on the list you have here is cost segregation. Can you explain how that works?
This takes advantage of the time value of money. Suppose I said to you, there's a benefit. You can have it today or 39 years in the future. You'd say, well, I'd rather have it today. So what happens is if we have depreciation of buildings, we're depreciating them over either 27 and a half years if they're residential or 39 years if they're commercial. But what cost segregation analysis does, we send an engineer to the property and he or she examines the property. So, well, this part is 39 or 27 and a half, but this part is 15-year property. This part's 10, this part's 5. And by the way, this part, you can write the whole thing off this year. It greatly accelerates your depreciation. So we have the opportunity to have the most beautiful words in the English language. It's so romantic.
Tax deferral.
Positive cash flow with a tax loss.
There you go. Love it.
What could be more romantic than that?
Yeah.
I'm going to tell my wife that over candlelight dinner tonight. Go ahead.
I would think that would be the most appropriate setting.
Yeah.
So what happens is you say, well, okay, I have this building and I'm generating a positive cash flow. I'm getting more cash in than I'm spending in expenses. So I'm making a physical profit, a cash profit. But through the use of depreciation, I can wipe out that profit. Now, I don't write a check to depreciation. It's a paper entry. It's an accounting entry. But when somebody gives you something nice, what do you say?
Thank you.
See, that's what a non-lawyer would say. A lawyer would say, more. I want more. I want more. And what happens is you say, I would sure like to, suppose we have this situation. We have a woman who's a brain surgeon and she's married to a house husband and she owns the building that she practices medicine in. And she's done the cost seg, but now through cost seg, she has a paper loss. She would like to go ahead and offset that loss against her practice earnings. But her accountant says, oh, there's that nasty old Internal Revenue Code section 469, the passive activity loss rules, can't do it. However, there's an exception to that. Real estate professional, and with a married couple, only one spouse has to qualify. So she says to her husband, honey, get off the couch, stop watching Oprah, and you're going to manage the real property. You're going to comply with the rules, and they're not hard to comply with. And now what happens, we can use that, what would have been disallowed passive loss against the brain surgeon's earnings or dividends or interest. So that's very sweet. So that's one of the things, when you look at tax savings, a lot of times you say, well, if I can do this, I can do that. Kind of like dessert. Well, if I can have chocolate cake, can I have ice cream too? And that's what this does for it. This gives us pie a la mode.
Very good.
Awesome.
Now, when she sells the building, I know the rules have kind of changed a little bit for the recapture of depreciation for capital gain. Is it the only?
Well, there's that. But what we might want to do, one of the things I like to do, is rather than sell and have that nasty old tax and the recapture, we might want to do a 1031. And then you say, but eventually I want to cash out and sit on the beach. We say, well, okay. But rather than sell the building, what I like to do is a Delaware Statutory Trust. So we say, okay, I do the Delaware Statutory Trust because that qualifies as 1031 property. So again, I'm not a landlord anymore. I'm out of the building. But essentially what I have is really a mutual fund of real properties, but I don't get taxed. And then the beautiful part is if you sold the building, it's very unlikely you're going to spend all the money that year.
Yeah.
You may say, I'm going to spend this money over the rest of my life. So with the DST, Delaware Statutory Trust, that's what you do. And you only get taxed as you sell the shares.
And you just have to make sure you find the right operator because you want to, it's like you said, it's like a mutual fund of real estate.
Exactly.
Find the right people. Okay, here's our second trivia question. How many zeros are there in a quadrillion?
A lot.
A lot. Yeah, that's one of the answers we're looking for. That's not exactly the correct one, though. All right, call 888.
That's a lawyer's answer instead of the CPA's. You know, I was a CPA before I was a tax attorney.
I remember.
The CPA would have given you the numbers. The lawyer says a lot.
And I'll come back with the joke on that one. All right, 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Stay with us. The Best of Investing will be right back. Welcome back to the Best of Investing. Edward Brown here, along with Nam Phan and our special guest, Steve Moskowitz. Hey guys, how many zeros are there in a quadrillion? Besides a lot?
17.
No. Remember, it's got to be in increments of 3, right?
18.
No, that's a quintillion. Back it off 3. 15 in a quadrillion. Which by the time we're finished with this show, the national
and that's going to be your tax savings after you listen to the show, right?
Yeah, tax savings or the national debt. Which, by the way, you were talking about the how an attorney answers. I had a quick joke for the audience and you. I think I told this once before, but 4 guys go in to look for a job: an engineer, an accountant, an attorney, and an IRS appeals officer. And they ask the engineer, what's 2 + 2? And the engineer takes out his protractor, does some calculations, and says 4. So, okay. Ask the attorney, how much is 2 + 2? And he says, well, somewhere between 3 and 5, but I don't want to narrow it down until I have all the facts. They ask the accountant, what's 2 + 2? And he kind of nudges them with his elbow and he says, what do you want it to be? And then they ask the IRS appeals officer, what's 2 + 2? And he says 4, but I'll settle for 3. Okay. Also make a quick mention here for Mountain Mike's Pizza in San Rafael. Pizza the way it ought to be. Every time I mention Mountain Mike's Pizza in San Rafael, I get hungry for pizza. They have an excellent pizza. All right. First of all, Steve, we forgot to give out your information if people want to call you for tax advice or the cost segregation, et cetera.
Call us at 888-TAX-DEAL. That's 888-TAX-DEAL. 888-TAX-DEAL or MoskowitzLLP.com. MoskowItzLLP.com.
Very easy to remember that 888 tax deal. Like that.
I got a question for Steve.
Yeah.
Are you getting more inquiries about people who have purchased and sold crypto and how to handle the tax?
That's a really separate area because the government recently started a program called Operation Hidden Treasure. Now, I know that sounds like an action-adventure movie.
Yeah.
But the government has shifted their main attention from foreign bank accounts to crypto.
Mm-hmm.
They think there's an awful lot of people dealing in crypto that are not reporting what they should or not reporting things properly. And also when President Biden is pushing through this program, as you know, he wants a lot more scrutiny on crypto. Also, President Biden wants to double the size of the IRS agents. He wants to give them a lot more money and equipment. And right now, crypto is in their crosshairs. So that's the big area.
If you just feed them a lot of pasta, you'll double the size of the IRS.
There you go. They wanted more people, not bigger people.
Oh, okay. I got it. But you got to figure that crypto, the whole idea is secrecy and all that stuff. So
that's where the crypto people make their mistake. They think it's so secret because a lot of criminals like to get paid in crypto.
Yeah.
It's not. Blockchain, all that stuff. They have really good records, which the IRS has a lot of now. So it's kind of like, if you find people that were alive before 1099s. Now here we're going back to the audience that thinks that 1099s were started at the time of creation. But in the old days, people would say, how would the IRS know where they kept the money? That was before 1099s.
Yeah.
And now if you open up a bank account, you don't dream of, well, how would the IRS know? Because they get a report.
Yeah.
And that's what's happening with crypto. People don't realize that.
And they changed it
now. And you even take a look at it. The government wants all this scrutiny of bank accounts and everything else. So it's more and more and more Big Brother looking over your shoulder. Hey, what you got there?
But they can't. Yeah. They were going to anything that had more than $600 worth of transactions in a year. I mean, that's going to be almost every human being on the planet. Well, I mean, and let's put it this way: in the United States, almost every human being, even kids who make babysitting money will have more than $600 in a year. I mean, they couldn't even hire enough IRS agents for that.
They
Who
don't
knows?
care.
Well,
Because and originally when 1099s first started out, the first year of 1099s, you know what the government did with them?
Nothing.
They rented grain silos and they stored them there because they got so much paper, they know what to do with it.
Is that
wow.
right?
So what happens is they get more adept. It's the same way with the foreign reporting when that started in 2009.
Mm-hmm.
Initially, it's what all this stuff, and then what happens, like everything else, maybe initially there's some tries that aren't so perfect, but then they get it, and then you have increasing sophistication with
Yeah.
the computers, and you have more
Sure.
artificial intelligence,
When
and
did
they
the- when-
look for
when
stuff.
did the 1099
And that's true. For example, if somebody comes into our office and they tell me that they're making minimum wage and they have $1 million in the bank, I'm going to say, well, you must have worked an awful lot of hours. How'd you manage that? And I'll look for a good explanation, like, oh, they received an inheritance, or they sold their house and then they retired and now they're working for minimum wage.
I like the inheritance part because that's taxable by the donor, not the recipient. So that's it.
And it's going to be a lot more so if President Biden gets his way.
That's right.
So the bottom line is, if we're doing even a simple tax return, it's called an economic reality.
an economic reality. Yeah.
Yeah. Wow, that's interesting. Yeah, I mean, Steve's point, it looks like we lost him for a second, or maybe he'll dial back in. But
You know what? While he's coming back,
Yeah.
I'll ask you the question that a listener comes in with. We got 1 minute. It says you said often that. Oh, Steve's back. Tell you what, Nom, I'll ask you your email question when we get back.
next segment, sure.
Yeah, Steve, we've got just about 20 seconds before we have to get to another break. Go ahead. Oh, you can't hear anything. Okay, so somehow something happened with we can't hear you either. So
Okay.
somehow we'll have to figure. Maybe jump out and then jump back in again.
Yeah, in the next segment, we can answer the question, and I'd like to talk a little bit about what's going on in the real estate market after Steve finishes off his thing. So,
Here is our third trivia question. Which state is home to the oceanside city, Myrtle Beach? Which state? All right. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. All right. Stay with us. You're listening to The Best of Investing with Edward Brown, Nom Fon, and hopefully Steve Moskowitz will come back. Don't touch that dial. Welcome back to The Best of Investing. Edward Brown here along with Nom Fon, and hopefully Steve Moskowitz will be back. He must have gone in a bad cell area. So question, which state is home to the oceanside city, Myrtle Beach?
Virginia?
Nope, it's South Carolina.
Oh, oh, yeah.
Yeah.
All right.
Quick mention here also for the Mount View.
Hello, guys.
Hey, Steve, you back?
Hey.
Hey, what happened?
I don't know. We hear you, but we don't see you, but that's good enough. Just hold on a second here. I'm going to give a quick mention here for Live Life at the Mount View Hotel in Calistoga. Every afternoon, they have vino and vinyl wine tasting. Friday and Saturday and Sunday, join them for dinner and a movie on site. Check them out at mountviewhotel.com. All right. So Steve, are you with us?
I'm with you now.
Okay, at least we can hear you. All right. So Steve, I want to ask Nom a quick question here, and then we'll get back to you if we can. So Nom, an email comes in from a listener. It says, you said you often get leads from other mortgage brokers. Now, why would they recommend your company?
Yeah. So I think the question, just to clarify what a lead, what maybe that person is referring to, a lead is a borrower, somebody who needs to borrow money to purchase a home. They need a loan. And why would a conventional lender, mortgage broker, somebody whose livelihood is making loans to people, why would they send us the client? And good question. So essentially, Pacific Private Money, we're Plan B. Ultimately, in Plan B, meaning that we're usually not the people's first choice when they're trying to get a loan to purchase a home, with Plan A being just, your conventional loan. And today's, you're seeing rates somewhere in the 3s. Ultimately, when people want to buy a home, they want to get a conventional loan, 30-year loan or so. But sometimes
Hello.
Yeah, Steve, hold on a second.
So a mortgage broker would only send us a client if they themselves can't place a loan for that client.
Okay.
And usually it's because that client doesn't qualify for a loan. with a bank, a conventional loan, usually just because of the circumstances. Sometimes, you think of hard money, you think of we're a lender of last resort, but that's not the case anymore.
Yeah.
Now, or for the last, since really Dodd-Frank passed, there's so many people who can't get conventional financing. And, with us specifically here today, what we're seeing a lot of referrals for are bridge loans, which help clients buy their next home before they've sold their current home. Because if they go to a bank, the bank's going to say, well, you can't afford two mortgages. So we'll put you in a loan once you sell your current home. But oftentimes that's not practical because it's a catch-22. Well, I can't sell my home until I find a home that I want to move into. Or I'd like to make sure I am in escrow on a home that I'm going to buy before I list my current home. But in today's hot market, you can't make an offer with a sale contingency. So we specialize in providing, among other types of alternative loan products, we specialize in bridge loans. That's sort of half of our business right now. And these bridge loans allow people to purchase their next home. We're providing a loan for their new home, and we can use the collateral in their existing home or the equity as collateral for the loan. And so that's why a mortgage broker is going to send somebody to us, because we are that short-term sort of solution for somebody to be able to get into the next home. Ultimately, though, we send that client back to the bank for a refinance because, again, like I mentioned, we're short-term. We're helping them get into the next home. Once they sell their departing residence, the home that they are currently living in, they usually pay us down or pay us off through a refinance into a 30-year mortgage at the rates that I mentioned earlier, 3% or sub 3%. I think you still get those kinds of rates, but essentially that's why a conventional lender will send us a client, and then ultimately they'll get that client back once they've sold their departing residence.
And
so
for more information, how do people get a hold of you?
Yeah, they can give us a call. So they can call us at 415-883-2150, or they can go to our website, which is www.pacificprivatemoney.com.
Very good. And now, Steve, you back with us again?
Steve here.
Steve here. Okay.
Steve,
So
welcome
Steve,
back.
let's go back to you for a minute here. So collection, what do you do, or what can the clients do if they can't pay their taxes?
There's a tremendous amount that you can do. And one of the things I want to caution you about is the IRS has just rolled out a new heavy-handed program. They are threatening people with criminal prosecution and the federal penitentiary for not filing returns and paying. Now, will they actually do this? I don't want to find out on my clients' cases. So I want to make deals like we've always made them under the old system. And let's talk about, there's so much you can do here that's good. First, an offer in compromise. Offer in compromise is where you offer the government part and they forgive the rest. This is tremendous. You can get out of your tax debt for just a portion of what you owe. It's you're saving grace. Another thing you can do to lower your taxes is ask for a penalty abatement. There's a lot of good reasons. And in the rule book, the government says, well, there's not just one specific reason or something that's required. They'll listen to all the facts and circumstances. This is an area where you get to plead your case and explain why you shouldn't be penalized. And there can be a lot of good reasons. Another thing is something called a hardship deferral. What a hardship deferral is they leave you alone until you're back on your feet. Say you lost your business during COVID, or your job, or you wiped out your bank account and you used your savings and now you owe some taxes and you can't pay them. Hey, leave me alone until I get my new business going or my new job. There's a lot of stuff that you can do. Another good one is monthly payments, where you get a monthly payment plan that you can live with. So the bottom line is, whatever you do, don't stick your head in the sand. Because here's something that comes up all the time. The number one reason people don't file returns is just because they don't have the money and they panic, they make a mistake, and they don't file year one. Then year two comes around and they still don't have the money. So, well, how can they file year two when they didn't file year one? And then all of a sudden becomes a lifestyle, a criminal-like lifestyle, always looking over your shoulder. I've seen 2 suicides over this. I've seen plenty of divorces, businesses ruined, lives ruined. I saw a guy gave up his kid for adoption because of this. Horror stories. None of them has to be.
Sheesh.
Niche indeed.
That's just great.
Yeah, so they should be calling you. Get some
Really
advice.
should.
Yeah.
Because, this isn't just a tax problem. This is somebody's life.
Yeah.
I
Yeah.
understand that people are trusting us with their lives. This is a big deal, and that's how we treat it. It's not a cold case file. This is somebody's living, breathing life. You have a person, spouse, kids, family, house, business. It's their whole lives that you're dealing with here. It's very important.
Yeah. Yeah.
All right, Steve, give out your information one more time if you would.
888 tax deal. That's 888 TAXDEAL. 888 tax deal. Or MoskowitzLLP.com. Moskowitz LLP.com.
Very good. And Nam, give out your information, and then we're going to cut to a break.
Yep, it's they can call us at 415-883-2150. That number again is 415-883-2150, or they can visit us online at www.pacificprivatemoney.com.
All right, stay with us. You're listening to The Best of Investing. We're going to be back with some closing comments. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money, and our special guest, Steve Moskowitz, tax attorney. Steve, what's going on with this employee retention credit deal?
The federal government is giving away money. It's a grant. It's a gift. The federal government will give you up to $26,000 per employee that qualifies for 2020 through 2021. So, for example, if you have 10 employees, you can get up to $260,000. If you have 20, double that, and so on and so forth. So what do you have to do? You either have to have a full or partial closure ordered by some governmental entity, or have your gross revenue down by a certain amount. And people understand the full closure, but with partial closure, an example of this is where the government says, hey, restaurateur, you can be open 24/7 for delivery and takeout, but you can't use your dining room. That's a partial closure. You qualify. Or they say, you can use in a later quarter, you can use your dining room 25%. That's a partial closure because you can't use it 75%. Or you have to have just outside, or you have to have curbside delivery. Lots and lots of things. That's what an awful lot of people miss. And there's a lot of old information on the internet that was changed. And I have an awful lot of clients that call me for something else, think they don't qualify, and they do. And this is tremendous. And if you don't have any type of closure, then for 2021, if your gross sales were down by 20% or more from 2019, you qualify. And 2020 is a different number. The bottom line is everybody that's an employer should look at this. And again, this is a gift. It's not a loan. It's not even like PPP. You don't have to pay it back. You don't have to ask for forgiveness. You don't have to spend it a certain way. Do whatever you want with the money.
Wow. That's
indeed.
Incredible. Yeah. Boy, people better take advantage of that.
Yeah, that's definitely, and with all the complications, people shouldn't try to figure it out themselves. They should hire you because you'll save them a lot more than if they try to do it themselves. That's for sure. Thank you so much, Steve, for joining us. And Nam, why don't you give us a little update for a minute or so about what's going on in real estate?
Yeah, in real estate, geez, this has been it's been a while since I've been on, but it's been another banner year for us. I mean, we're in mid-November, got a month and a half left of the year, and it looks like we'll end the year 175% over last year in terms of total growth and activity. So, the real estate market's still really hot, and it's not just, home purchases and, multiple offers. It's, a lot of construction going on, a lot of rehab and multifamily projects just because, and rentals. People are buying homes to rent out just because, affordability is so low. Yeah. These days, more people are going to need to be renting, and also interest rates are so low for investor borrowers who want to buy homes and build a portfolio of rental properties. You can get interest rates in the mid fours to buy and hold real estate, and these are 30-year loans. So overall, the entire real estate sector and housing is still strong, and it's going to be strong for the foreseeable future. Home purchases may cool down a little bit, and that's not a bad thing, but overall real estate activity is just, still really vibrant. Interest rates are still really low. So you
You're not
see it going.
expecting the same kind of, kind of great recession that we saw in 2008.
No, I mean, because the fundamentals of people who, in terms of people being qualified to get a loan, that's still rigid. So there's still people who, it's not like 2008 where you had, had a heartbeat and you could fog a mirror, you can get a loan and you can buy, several homes. You have to be qualified. And also today, homeowners have so much more equity than they did, 2008. They're not likely going to walk away. And, I think banks are going to have to work with people if something did happen. But right now, things are very vibrant. So,
great. Well, thanks
yes.
again, Dom, for coming back after a hiatus. Steve Moskowitz, thanks again for joining us. Here's our thoughts for the day. My wife told me to stop impersonating a flamingo. I had to put my foot down. That was bad. Okay. And did you hear about the ATM that got addicted to money? It suffered from withdrawals. All right. Tune in next week for the best of investing. We'll be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.